Lemonade started out with seeing a problem in the insurance industry that it thought it could solve, and that it was using artificial intelligence and behavioral economics as a way of trying to solve that problem. And the problem had nothing to do with technology. The problem had to do with the essence of the business model of traditional insurance. So I've been in traditional insurance my whole life, right? 35 years, 25 at AIG in various capacities, chief underwriting officer, general counsel, chief innovation officer, chief operating officer. So I have lived and breathed traditional insurance. So I never really thought about the problem that Lemonade was trying to solve until I joined Lemonade. And the problem began with asking the question, how do our customers think of us? Now, how many of you have heard of the Urban Dictionary? Just about everybody, right? Everybody here. Okay. So as you know, the Urban Dictionary is the essence of wisdom of the crowd, where people are asked, what is your definition of a particular industry? And the definition which is most common becomes, in the mind of the Urban Dictionary, the official definition of that industry. So people were asked, how would you define the insurance industry? And so what they said was that the insurance industry is a business that involves selling people promises to pay later that are never fulfilled. Now, as someone who spent my entire time in the insurance industry, this was not really very good news. And unfortunately, it apparently has been around for a long, long time. This animosity, between our customer and ourselves. 1384. So in 1384, there was a merchant named Francisco del Marco. Now, Francisco del Marco was sending a letter to his wife and talking about insurance. And so what he said was, for when they insure, it is sweet to them to take the monies. But when disaster comes, it is otherwise. And each man draws his rump back and strives not to pay. 1384.
That's the date.
That's the date that he said it, in 1384.
I thought banking was the oldest profession.
Banking doesn't come to my mind when I think about what was the oldest profession.
Well, okay, second oldest profession.
Second oldest profession. Actually, insurance goes to behind that, even BC. That's how you define it. But in any event, so why do people hate us, right? And they hate us in part because there's an inherent conflict in the traditional insurance model, whereby for every dollar not paid in a claim is another dollar of profit to the insurance company. So the insurance company and their customer is an inherent conflict of interest position. It's hard to think of any other industry that has survived for hundreds of years where their very business model is that you're in conflict with your customer. Now, the result of that is that customers believe that they will not get paid fully in their claim. That results in many claims examiners saying and believing that their customers are going to try to cheat them because they're going to inflate their claim knowing they're not going to get the full amount, and therefore they want to try to get what they can. And so there's this animosity. In fact, Lemonade probably is the only company with its own chief behavioral officer. So we have a chief behavioral officer. His name is Professor Dan Arlelli. He's a professor at Duke University. And if you haven't seen one of Dan's TED Talks, you really should. Just Google him, and any of his TED Talks are good. And he talks about behavioral economics, and he talks about how behavior can be modified. And he said about the insurance industry, if you try to create a system that brings out the worst in human beings, you could not do better than insurance. And so this was the problem to be solved. And Lemonade tried to do this in a number of ways. And I'm going to be talking about the business model and how we tried to get rid of our conflict of interest in a moment. But in many ways, it began with creating a sweet and delightful and friendly experience for the customer, as well as adding a very interesting notion of charitable giving. But there is nothing that explains the Lemonade model better than the Lemonade app. So, in 1 minute and 42 seconds, this is the Lemonade app, AI Maya and AI Jim, if you're familiar with those terms, explaining how they work. So in that short 1 minute and 42 second video, all the major value propositions of Lemonade were set forth. And you saw the beginning of it was the use of artificial intelligence in the underwriting system. Now, the use of artificial intelligence in underwriting is not terribly new, but what Lemonade has done is reduce substantially the number of questions, completely change the look and feel of an application. What you saw in the first half of that video was an insurance application. It looked nothing like an insurance application. And it used chatbot type of technology in a way that actually didn't even exist before Lemonade. And Maya, by the way, is a real person. In fact, the original picture of Maya, she looked like a movie star because she happens to be very pretty. And we said to her, we need a picture of you where you look more ordinary because no one's going to believe you're a real person. And through a very sophisticated chatbot, you were able to talk to your customer and essentially have the system fill out an insurance application. How did you sign it? Of course, on your mobile device. It takes about 30 seconds to calculate a quote, bringing most of the information from third parties. So that area where it showed the number of stars and whatnot, we were bringing information from ISO, we were bringing credit information from LexisNexis. All this was being done in rapid speed. The result was, and we looked at prior losses and everything else that you do as a homeowner underwriter. All this was done invisibly for the customer in a very friendly and fun way. So yes, you can go on geico.com, press a few buttons, fill out what really looks like an insurance application and get a pretty quick quote. I don't think as quick as what we do, but it's not sweet and delightful. You look like you're going on the website and filling out an application, as opposed to having a friendly dialogue like you would with your broker, and you get a quote. But the real magic of artificial intelligence is what we do in a claim. So the second half of that video had to do with how quickly we handle claims, and wasn't a real life example, but it was an example that then became real life over and over and over again, which is the only way to submit a claim to Lemonade is by your mobile device. There is no claim form. There is no fax machine. There is no address to send a claim form to. You can't even submit a claim online. The only way to submit a claim is through your mobile device. And yes, we figured out what to do if your claim is you've lost your mobile device. And notice, though, that a good portion of the claim process is talking into a video, telling the system what you did. And then through technology, we're able to then categorize that claim. But more than that, through face recognition and other types of technologies, we're able to run 18 different anti-fraud algorithms to determine whether the claimant is trying to commit fraud. So the system, once you hit the submit button, verifies coverage, verifies the existence of the policy, runs 18 different anti-fraud algorithms, and if it is a simple claim, you lost your coat in a bar, that was the first one we had that was done totally by AI. We call it AI Jim, because Jim is our chief claims officer, so the system is AI Jim. AI Jim's a lot faster than real Jim, by the way. And the first claim that was handled by AI Jim was someone lost their coat in a bar, after the deductible $400 coat, put in the information, explained what happened, hit submit, and some of you probably read the blog, but I'm going to ask the question anyway. How long did it take for AI Jim to analyze that claim, determine that it's coverage, and institute an ACH payment to actually pay the claim? Anybody throw out a number? Somebody probably read the blog anyway. 3 seconds. As far as we know, it is a record in claims paying. And that just didn't happen once or twice or 3 times. 28% of all our claims are handled that fast. And the goal is to get it up to 80 to 90%. Now, obviously, there'll be many types of claims that you can handle simply through artificial intelligence. High severity claims, litigation, things of that nature. But if your homeowner's policy and most of your clients are renters, then this is perfect. However, artificial intelligence was used not just to try to change the behavior of our customers through face recognition, through creating a sweet and delightful experience. We also needed to change the way that we approach them. How many people know what this is? So this is Ulysses. So Ulysses is a ship captain, and this is showing a picture of him being tied to the mast. And actually, it's really unclear, but in this picture, but he also had was unable to give orders. Now, the reason for all this was that, according to Greek mythology, in order to go to a certain location, you had to pass by these mermaids. They were called sirens. I'm going to remember this story. So the sirens were beautiful, and they sounded terrific, and they had these great songs. So the problem was that if sailors passed them by and heard the music, they would turn their ship into the sirens. They would then crash, and the sirens would then eat them. So not a very good idea. Now Ulysses knew this. He knew that he would hear the sirens, and he knew that how stupid it was to turn in and go in their direction, that it would result in his death and the death of his entire crew. And yet he knew that he would not be able to resist. He would not be able to resist doing something really, really dumb. So what he did was he roped himself on the mast, covered his mouth, and told all of his subordinates that he would be unable to give them orders, and if he tried to give them orders, they were to kill him. The result was they were able to pass through the sirens safely. So this is what psychologists and technology companies have begun to call the Ulysses contract. Right? This is when you do something to tie your own hands, to prevent yourself from doing something that's really stupid. So what does this have to do with insurance? And what does it have to do with what Lemonade did? Well, what it has to do with insurance is that you can say to your customers, we understand there is a conflict of interest. We understand that for every dollar we don't pay you in a claim is another dollar of profit. But we take pains to hire top-notch claims examiners. We have a very strong moral code here, a very strong ethics code in this company, and we do not fall into that trap of that conflict. You can say that, and almost all carriers do that. There are two problems. One is human nature is human nature. Sometimes you do something that's really, really dumb and you do it anyway. And secondly, there's the issue of perception. That even if claims departments, and many of my friends are claims examiners, even if claims departments don't do any of that, they pay all covered claims, they pay it quickly and easily and without trouble, the perception by our customers, is that we won't do this. So, what did Lemonade do? We took a card out of IT and the technology industry, and we created a SaaS model where Lemonade gets 20% off the top, 20% of the premium to run and manage the insurance company. Nothing more, nothing less. Regardless of how the losses look in a particular year. No profit sharing, nothing. 20% no matter what. We have no motivation not to pay a claim because it doesn't add 1 penny to our pocket. But there was something else that had to be done. So what happens if you have a good year? What happens if there are profits? What do you do with it? Well, you can't take it. You just said you wouldn't. So what the Lemonade model did is said we're going to give that to charity. But not just any charity. The charity chosen by our policyholders. And that's, once again, where IT and maybe artificial intelligence comes in. So you've noticed that in that video clip I showed you before, there was a portion that after you bought the insurance policy, you got a list of charities to choose from. And you selected the charity that was most important to you. And then what we do is we group all the people that choose the same charity. And that's the peers in the peer-to-peer model. We group all the people who chose the same charity, and if that group is profitable, regardless of anybody else, if that group is profitable, then the profits of that group goes to the charity chosen by that group. Now look how that affects behavioral economics. You might also have seen that in the claim portion of the video, the claimant had to sign an honesty statement. And they signed the honesty statement before they told us anything about the claim. And what the honesty statement said was, everything I'm about to tell you is the truth, and I realize that if I claim more than I deserve, I'm not hurting a big bad insurance company, I'm hurting a charity, and not just any charity, but the charity that I have chosen. So IT user interface and artificial intelligence coming together to create a new user experience to solve what was fundamentally, at least according to Lemonade, business model defects.